Copenhagen dazzles global entrepreneurs with waterfront harbors and Michelin dining, yet it imposes Europe's steepest top marginal income tax rate of 60.5% on high earners today. Denmark utilizes a highly progressive tax system where labor income rates reach extreme levels, fundamentally reshaping financial planning for successful business founders operating inside the nation. Worldwide millionaire migration reached massive scales, with an estimated 165,000 wealthy individuals relocating globally in 2026 to optimize asset protection, legal stability, and long-term financial security. A report published by Bobby Casey on April 15, 2026, highlights how steep tax burdens across nations like Denmark and Belgium push entrepreneurs toward low-tax global jurisdictions. With a population of just 5.9 million residents, Denmark punches far above its weight, maintaining an outsized global economic footprint compared to much larger metropolitan areas. Denmark's top marginal rate on labor income officially reaches 60.5% in January 2026, creating one of the most aggressive fiscal environments for top earners anywhere. This 60.5% top rate specifically includes an 8% labor market tax that is automatically deducted directly from an individual's gross income before standard brackets apply. This steep taxation tier applies strictly to earnings exceeding 2,592,700 Danish kroner, which translates to approximately $375,000 in annual personal labor revenue. By contrast, Denmark's baseline corporate tax rate stands at a competitive 22%, aligning closely with the broader Organization for Economic Cooperation and Development average standards. While the baseline corporate rate seems moderate, the effective tax rate for financial companies increases significantly to 26% due to specialized sector regulations. Businesses operating within the hydrocarbon extraction sector face an extreme combined tax rate, reaching 64%, creating a stark outlier within the national fiscal structure. Furthermore, dividend payments directed to corporate entities located in EU black-listed tax jurisdictions are heavily penalized with a staggering 44% withholding tax. Prime Minister Mette Frederiksen announced a dramatic policy shift on February 26, 2026, proposing the reinstatement of a net wealth tax on Denmark's richest residents. This ambitious wealth tax proposal was introduced alongside a surprise snap election call scheduled for March 24, 2026, setting the stage for high-stakes political battles. The proposed net wealth tax specifically targets less than 1% of Denmark's total population of 6 million residents, framing wealth distribution as a central campaign issue. The government's initial wealth tax framework aims to raise approximately 6 billion Danish kroner, equating to roughly $1 billion in annual state revenue. Prime Minister Frederiksen defended the policy by noting that when the wealthiest 1% owns around a quarter of total net wealth, the societal imbalance becomes unsustainable. The far-left Red-Green Alliance Party, known as Enhedslisten, made this net wealth tax its absolute ultimate demand for participating in any future governing coalition agreement. Enhedslisten's detailed proposal specifies a 1% annual tax on net fortunes exceeding 35 million Danish kroner, capturing substantial accumulated personal fortunes. This ambitious threshold equals roughly $5 million encompassing liquid assets, traded securities, unlisted shares, private property, and pension savings minus outstanding debts. Denmark's Ministry of Taxation, known as Skatteministeriet, estimates this progressive wealth tax would directly affect approximately 14,000 affluent Danish residents. According to official ministry calculations, this specific leftist tax model would generate an estimated 10 billion Danish kroner in annual revenue for the state treasury. Enhedslisten's spokesperson, Pelle Dragsted, told the Berlingske newspaper that any governing cooperation agreement must contain an explicit commitment to combat growing societal inequality. In October 2024, Denmark's Tax Law Council proposed taxing unrealized gains on cryptocurrency holdings at a rate of 42% using inventory taxation principles. Known locally as lagerbeskatning, this specific asset appreciation measure signals the government's aggressive legislative direction toward taxing unrealized wealth gains directly. By the close of 2025, approximately 142,000 millionaires had moved across international borders globally, with many seeking refuge in low-tax jurisdictions. The ongoing migration of affluent individuals reflects a deliberate global strategy centered heavily on tax certainty, legal stability, and preserving generational wealth. The broader Nordic region offers a cautionary split-screen comparison, highlighted by Norway's severe capital flight crisis, resulting directly from aggressive domestic wealth taxation. Conversely, Sweden provides a compelling contrasting example through its post-abolition billionaire boom, demonstrating how removing wealth taxes encourage domestic capital retention. For high-earning foreign professionals arriving in Denmark, the Researcher Tax Scheme, also known as Forskerordningen, or the 48E scheme, provides a vital financial exception. This popular expat incentive program offers qualifying foreign specialists a flat tax rate of 32.84% in place of the standard progressive tax stack. High-earning expatriates can maintain this advantageous 32.84% flat tax rate for a maximum duration of up to 7 years while residing in Denmark. In 2026, Denmark reduced the minimum monthly salary requirement for this researcher scheme from 78,000 Danish kroner down to 65,400 kroner to attract international talent. Non-EU citizens looking to relocate can utilize alternative residency pathways, such as the Pay Limit Scheme, which requires a minimum annual salary of 514,000 Danish kroner. Another popular option for ambitious international entrepreneurs is the Startup Denmark visa, designed specifically to foster innovative business ventures within the Danish economy. Monthly living expenses in Copenhagen typically run between $2,400 and $3,500 reflecting the city's high standard of living and robust economic infrastructure. For expats seeking more affordable alternatives, regional Danish cities like Aarhus and Odense offer living costs that are 20 to 30% cheaper than the capital. Despite its modest population size, Denmark successfully spawned legendary global brands including Lego, shipping giant Maersk, and pharmaceutical leader Novo Nordisk. The nation's impressive commercial roster also includes iconic enterprises like Brewer Carlsberg and high-end audio innovator Bang & Olufsen, shaping international markets. Denmark consistently secures its position among the world's top 3 happiest nations, driven by exceptional civic trust, low corruption, and overall societal contentment. This extraordinary civic cohesion and widespread societal trust are heavily reinforced by maintaining some of the lowest income inequality levels found anywhere on Earth. Danes exhibit remarkably high levels of institutional trust in government operations, creating a cooperative rather than adversarial relationship between taxpayers and public authorities. Steep progressive income taxes directly fund comprehensive universal healthcare services, ensuring that every citizen receives complete medical coverage without out-of-pocket expenses. Tax revenues also fully subsidize free educational pathways extending all the way from primary schooling through advanced doctoral PhD programs for qualifying students. Ultimately, these heavy fiscal contributions maintain what institutional analysts consistently rate as Europe's strongest social safety net, cushioning economic vulnerabilities across society. Copenhagen has earned global renown as a cycling paradise, offering extensive dedicated bike lanes, waterfront swimming harbors, and vibrant urban recreation spaces. However, newcomers must navigate challenging environmental realities, including dark, gray, and bitterly cold winters that test endurance between November and February. Copenhagen's housing market remains ferociously competitive, with desirable rental apartments frequently disappearing within mere hours of being listed on the market. Danish social culture, heavily influenced by the traditional concept of janteloven, can occasionally feel closed to outsiders expecting rapid integration into local friendship circles. Despite steep fiscal demands, numerous multinational corporations and foreign investors continue deploying capital into Denmark, drawn by unmatched workforce productivity and stability. American expatriates residing in Denmark frequently utilize the foreign tax credit system to effectively eliminate overlapping U.S. tax liabilities on their foreign earnings. For wealthy individuals making relocation decisions in 2026, Denmark's robust legal framework and institutional predictability outweigh initial sticker shock from high tax brackets. Unlike cultures viewing taxation as inherently adversarial, Danes largely treat fiscal contributions as a shared collective investment, ensuring long-term national prosperity and harmony. Expats quickly learn to embrace the comforting hygge lifestyle concept, transforming dark winter months into cozy periods of personal reflection and domestic well-being. Balancing steep marginal cuts with world-class public transit and pristine urban infrastructure makes Copenhagen a uniquely compelling destination for discerning global citizens. When evaluating European relocation options, wealthy founders carefully weigh property levies, capital gains rules, and exit taxes implemented across different competitor nations. For instance, Belgium imposes a top income tax rate of 53.7% alongside new capital gains levies and a restrictive 30% exit tax. Meanwhile, Finland enforces personal tax rates reaching up to 59.4%, combined with a 25% value-added tax, keeping Nordic fiscal pressures remarkably high. Millionaires continue choosing Copenhagen because extraordinary societal trust, exceptional quality of life, and predictable business governance outweigh the undeniable financial friction of steep taxation. Ultimately, Denmark proves that high taxation can successfully coexist with thriving entrepreneurial wealth when it funds a stable, highly educated, and remarkably secure society. Subscribe to our channel today for more in-depth analyses exploring global wealth migration trends, international tax strategies, and macroeconomic shifts shaping the modern world.